Coinbase breaking records, shares surpass IPO price after 2 years, a clear sign of a bullish crypto market. Meanwhile, BlackRock eyes spot Bitcoin ETFs for its global allocation fund, showcasing rising institutional interest. Federal Reserve Chair Powell addresses CBDC concerns as emphasizing privacy and autonomy. Exciting times in the crypto world. Don't forget to subscribe, like, and share, and let's start. And we're starting off with Michael Saylor. I'll be buying Bitcoin at the top forever. No bear season again, said by Saylor. These entities that are now in a Bitcoin are masters of forcing shakeouts in a market. It is how they secure assets for generations to come that will never see the light of day again. This will mean more at 500,000 than it means now. But please, for your last name, hodl. Next up, move higher, Bitcoin, move above 70k, Shiba needs you to move higher, Satoshi Nakamoto, keep manifesting, keep fighting, keep hustling, let's go. At a basic level, Bitcoin is a giant planetary scale mechanism designed to use the global electric power grid to introduce the physical costs and other irreproducible properties to cyberspace. This is revolutionary and will have far more applications than just money. So Coinbase crashes again, third strike out of the 3 price pumps. Unlike stocks, Bitcoin doesn't have circuit breakers, and Bitcoin has Coinbase instead. Why does Coinbase have circuit breakers? The reason Coinbase does this circuit breaker is because retail is outbidding spot Bitcoin ETF issuers clients for the Bitcoin, and spot Bitcoin ETF issuers are number one priority. Coinbase has too much control, as if you ask me. Spot issuers need other custodians to break up the centralized custody of available Bitcoin, and retail needs to buy their spot Bitcoin exposure from iBeat for the full reliability. Next up, all the Bitcoin liquidity is taken out and now run it up to a new all-time highs, please. So basically we saw the shorts, we saw the longs, and they all being liquidated, and now we are building the new positions over there and waiting for the actual moment that will happen. Next up, this is the speculation, but there has to be some Bitcoin manipulation going on by Coinbase here. How can you have 4 years to prepare your system, have the majority of the demand coming from institutions, and still the servers crash every time we breach all-time high? Here's what I think is happening. Bitcoin breaks all-time high, market starts running, and OTC desks run out of Bitcoin. A bull market prevention team at Coinbase steps in and shuts down the engine, and retail panics trading algos start dumping in the OTC desk gets flush again. Coinbase turns back on the engine and allows BlackRock, Fidelity, and the big boys to buy up all that Bitcoin. And if this is not happening, then Coinbase is proving to be the most incompetent exchange, and I believe BlackRock and others are trying to hold their feet to the fire in the background. But as we all know, incentives line up perfectly for Coinbase to go down. And the next one we go for. Breaking news as Bitcoin to 100,000 in 2024 has been confirmed by Jim Cramer, as he says 70,000 was the Bitcoin top and Bitcoin will not hit 100k in 2024. Sell everything you have and come back in 2026. Probably that's not happening, and this is all lies. Just in, Bitcoin is being taken off exchanges in record numbers ahead of the halving next month, as this is the bullish sign for us. Why not do a soft fork of Bitcoin, including a change in the consensus rules that rejected any transactions that paid more than 1,000 Bitcoins in about the output? It could also be 505,000. I know that soft forks require consensus among the majority of miners and nodes to be successfully implemented. Introducing such a limitation might also introduce new attack vectors or the unintended consequences, and could potentially create compatibility issues for existing software and infrastructure. But by limiting transaction sizes, it would become more difficult for large Bitcoin holders to move large amounts of funds in a single transaction, as this could contribute to a more equitable distribution of Bitcoins and reduce the risk of excessive wealth concentration in a few hands. And we can also reduce the attack surface for attempts at price manipulation by big players like BlackRock, and who will be more and more present in the future. We could perhaps limit the extreme volatility during the announcements or massive sales and purchases. So it could also strengthen security, like the value overflow incident attack of August 15, 2010, which created more Bitcoin than it was possible to mine, pre-soft fork and others problems. This tweet is ultra theoretical, and this is not the idea behind the creation of Satoshi, and it be flawed in certain points, and it is an idea that came to my mind while writing another tweet. Subject open to debate. Next up, we go for just in, as BlackRock Bitcoin ETF is set to break $10 billion in total flows today. Fidelity is a strong second place with $6 billion. Demand is strong and is set to grow as more investment platforms and banks allow these ETFs onto their platforms. As we could see that the BlackRock continues to buy more and more, and Fidelity, trying to catch up, still can't get up to it. Bitcoin ETFs and Coinbase rally lead to a crypto market resurgence. So Coinbase shares exceed their IPO price for the first time in 2 years, signaling a bullish crypto market trend. BlackRock sets its sights on the spot Bitcoin ETFs for its global allocation fund, indicating growing institutional interest, as Federal Reserve Chair Jerome Powell addressed his concerns regarding the central bank digital currency, ensuring privacy and autonomy. As this analysis explores the recent rally in Coinbase shares and strategic move by BlackRock towards the Bitcoin ETFs and the Federal Reserve's stance on the digital currency, highlighting the key trends shaping the crypto financial landscape. Coinbase stock recovers IPO listing and price. So shares of Coinbase have made a remarkable comeback, trading above the $250 and regaining their IPO price for the first time in 2 years, as this surge reflects the broader crypto market recovery, driven in part of the approval of the spot Bitcoin exchange traded funds in the United States. As the stocks rally up to 11.5% on March 8th before stabilizing around the $255, surpasses its listing price of $250, marking a significant turnaround from its low of $33 in 2023. Spot Bitcoin ETFs gain institutional support. BlackRock's intentions to purchase spot Bitcoin ETFs for its global allocation fund signifies a pivotal moment for cryptocurrency investment, suggesting increasing acceptance and institutional support, as this move, particularly the potential inclusion of BlackRock's own iShares Bitcoin Trust and ETFs from other issuers, emphasizes the growing interest in cryptocurrencies among traditional financial giants. BlackRock's filing with the Securities and Exchange Commission indicates a strategic approach to incorporating Bitcoin into its diverse portfolio, reflecting confidence in the cryptocurrency's performance and stability, as the fund with $17.8 billion in assets under management showcases Bitcoin's expanding role in the global finance. Federal Reserve Powell dispels CBDC fears. So Federal Reserve Chair Jerome Powell's recent comments before the Senate Committee on Banking, Housing and Urban Affairs have provided clarity and reassurance regarding the U.S. stance on the central bank digital currency. Powell emphasizes that the U.S. is nowhere near adopting a CBDC and would ensure privacy and autonomy, contrasting with the concerns related to surveillance capabilities seen in the digital currencies like China's digital yuan, and this stance reflects a caution and considered approach to digital currency, prioritizing user privacy and traditional banking system integrity. In conclusion, we have that the recent developments in the cryptocurrency market, from Coinbase's stock rally to BlackRock's strategic investment in Bitcoin ETFs alongside the Federal Reserve cautious stance on the CBDC, highlight a period of significant evolution and maturation in the crypto financial landscape. So these events underscore the increased integration of cryptocurrencies into the traditional financial system, as the growing interest from institutional investors and the importance of regulatory clarity and the privacy in shaping the future of digital currencies. And as the market continues to evolve, these trends offer valuable insights for investors and stakeholders navigating the complex interplay of finance and technology. That's all the information we got on the Bitcoin so far, so don't forget to subscribe, like, and share. See you in the next one, and peace.